All right, what's going on, everybody? Welcome back to the channel. It's Millennial Trades. So let's go ahead and get into this. It's December 19th, 2022. We've got Christmas coming up on Sunday, so we're about a week away from Christmas here. The PCE data, the inflation report that comes out this week, comes out on Friday. So I'm not exactly sure how really to trade that, unless you want to trade maybe the anticipation going in before it. It seems to me that we could get some inflation numbers that are a little bit maybe lighter than expectations. I know Canada just came out, I think, with their producer prices today. I saw that on Trading Economics, and their producer prices came in a little bit lower. They fell in November. They actually fell 0.4% month over month in Canada, the producer prices, compared to the 2.4% rise in October. But that was kind of maybe a good indication that we might see the PCE, even though that's the personal consumption expenditures index, maybe it's indication that it'll come in a little bit lower than expectations. Who really knows? But again, I'm not exactly sure how to trade it. As far as Monday, I'm not sure how I'm going to trade it, I should say, or if I will. But as far as Monday, the start of the week, overall down, NASDAQ down, little over a full percentage point. I think the S&P 500 futures closed not quite at 1% down, but it was about 1% down. The NASDAQ lost a little bit more. I think the Dow was down maybe 200 points or something like that. I don't usually follow the Dow. Volatility index still just kind of low. Now the dollar had some pretty extreme moves today. We got almost back up to, I think it was close to 105 or 1.05 on the dollar index. To see it kind of, it popped way up. The dollar really popped up today, and then it got dragged back down, and it kept trying to maybe retest that high from earlier. But because of that, the markets really slowed down because it was a very volatile day towards the downside early in the open. But towards the end of the day, it just kind of slowed down. It was kind of grinding, kind of frustrating to watch because there wasn't a lot of trades to take. I will confess, I want some exposure to the upside. Amazon had such a bad day. We've got all kinds of bad news for Amazon. All it would take is a little bit of optimism right now, especially right before Christmas, right before the new year. Maybe we could see a rally in the markets. I'm not saying we will, but I wanted a little bit of exposure to that. So I did get some overnight calls or some weekly calls on Amazon. Put about $1,000 into the trade. It may not hit, probably won't hit, but I wanted just a little bit of exposure, maybe an easy quick flip the next couple of days. We'll see how that goes. My scalp this morning went very well. We were up almost $800 just on the scalp, because it was such a good day and we've been doing so well. I figured I'd put a little bit of overnight risk on just to see what happens, So I'm not anticipating a Santa Claus rally, but I have a little bit of exposure to it this week in the form of Amazon calls. And if it plays out, it plays out. If it doesn't, I'll still be playing the short side. A lot of the times I've been talking about this, you'll get through your scalp and then you'll watch your option contracts go down. You'll watch your option contracts go further than when you sold them for, whether you're in calls or puts. If it's going in your favor, especially if you're doing these short opening scalps. So it can be very frustrating to see it go lower, but you got to remember the market is only willing to give what it's willing to give. And a lot of the times, if you simply just sit on a win and don't take action and don't realize those gains, a lot of the times it can turn around and you'll lose all of them. So, and then you'll be in the red. So it's something to think about when we're kind of short-term trading, because that's still my goal for the rest of the week, is to scalp the markets, scalp to the downside, unless we have some really good indication that I should just hold the puts. But a lot of the times I've really messed up my account bad by not letting go and realizing some of those gains. But because Amazon was down, so much today, I figured I'd gain just a little bit of exposure to the upside. This was like towards the end of the day, I started putting that overnight trade on. It's a little risky. I wouldn't say I'm nervous about it, but I'll definitely be thinking about it later tonight and possibly early tomorrow morning before the sun comes up. But who knows? You got to take some chances in this life to win. So that's pretty much kind of like my trading recap and kind of what I saw in the markets today. Again, always following the dollar, but the dollar's been giving some very confusing signals, especially today, really. But the fact that the dollar had such a big spike, like I said, and then got dragged all the way back down and past its opening low, I kind of feel like maybe stocks might rally this week. What do you guys think? Are you anticipating any sort of Santa rally, today? This week, next week? Are we going to get a New Year's rally? What do you guys think about this? What's the possibility? Because, again, I don't want to be just eternally bearish and be kind of like a perma-bear here. But there just doesn't seem to be a lot of fundamental reasons for the market to rally. Again, the PCE data doesn't come out until Friday, and that's really the big thing. So, I guess that could come out Friday morning, and the market could really pop up then. But a couple of things to note. By the way, oil rose a little bit today on China demand hopes. So that was probably affecting the markets as well. Whenever you see oil go up or commodities go up, it just kind of puts a little bit more pressure on the stocks. Europe closed higher, which is maybe another reason to have some optimism, for the American markets later on this week. But nobody really knows. You had U.S. home builder confidence falling for the 12th month. I actually thought this news was going to affect the markets a lot more than it did. NAHB housing market index in the U.S. declined to 31 in December of 2022, a fresh low since 2012. I guess we kind of got a reaction out of this, but I was really expecting a little bit more of a bearish reaction. I was thinking maybe the Nasdaq might hit 2% down or something. The S&P 500 might hit close to 2% down on this news, and we didn't get that. In fact, towards the end of the day, the markets kind of looked like they were trying to turn around. We'll just have to wait and see how this plays out. Nobody really knows. The markets could gap up, hundreds of points in the morning, and there's no way to predict it. But having maybe a little bit of exposure, or at least keeping an open mind to the Santa rally without calling it, I don't think that's unreasonable. So a couple of more things to note. In dealing with the interest rates and the restrictive monetary policy, I found some comments from Peter Casimir, who is the governor of the ECB in Czech. I think it's is it not Czechoslovakia, but is it No, that doesn't exist anymore. It might be Slovakia. Where? I didn't write it down, but he's part of the ECB. He's a governor of the ECB. And by the way, guys, I know my microphone cuts in and out sometimes. I got to get a new mic. I will do that very, very soon. I promise. But let me just look this guy up again one more time. He's the governor of the Slovakia. Okay. I was saying Czechoslovakian bank, but it's the Slovakian bank that's part of the ECB. Similar structure to the Fed here, I suppose. Anyways, this guy had some comments, and he says, quote, "It's impossible to know for sure how high rates should go, and that restrictive policy most likely needed until 2025. So this is just an ECB ghoul, right? He doesn't have any real power over the Fed, I don't think. But heed his words, because if that's kind of what some of the ECB governors are saying over there, and they're talking about going, much higher than where they're at. I think they're only at 2% in the European Union. But for them to say that they have to go higher and that restrictive monetary policy will be appropriate probably until 2025, well, the Fed and the ECB do things they do a lot of very similar things. They move almost in lockstep. Of course, our economy is a little bit different than Europe's. I think this is probably why they haven't raised rates as fast as we have. We went from like 0 to almost 5 now. They're only at 2%. But they did have 275 basis point rate hikes the last couple of months. And then it came in, I think it was last week or the week before, the ECB raised rates by only 50 basis points this time. Same thing with the UK, I believe Canada as well. So it's just another central banker telling us that crushing the hopes for a pivot, right? Crushing the hopes for a pivot in Europe or here in the US. Obviously the risks to the economy from raising the interest rates, there's a lot of downward risk to the economy. But if they don't raise the interest rates, there's a huge risk to inflation getting worse. That sort of explosion of inflation again. Everybody's saying inflation is peaking or has peaked. It's cooling off. It's cooling down. We don't know that, though. We don't have any true evidence to tell us that the inflation run is completely over with. You got to think, too, I mean, in Europe and in the UK, their inflation rates are at like 10%. So they have a long ways to go. Our inflation rates are only like at 7% or something like that. I mean, core is, I think, at 5.4% or something like that. But is core inflation really where it counts? Because we're spending so much money on food. There's the concept that real inflation is much higher than that. But how does anybody really calculate this? A lot of people just state that as fact. It's very hard. It's an information game, and it's hard to get the correct information, especially when you're not a professional. We don't really know what we're talking about. We're just trying to figure it out. Again, in Germany and in Europe and pertaining to Amazon, but not just Amazon, the UK, they're facing strikes, workers' strikes. And I think this is another reason Amazon was hit kind of hard, because Amazon's going to be the target of some of these strikes in the UK and in Germany. They're claiming they're not being paid enough. I think Amazon starts them out at like 13 euros an hour, which doesn't sound like a lot. I know here in the US it's like $18 an hour. But you have German Amazon strikes and UK strikes. The UK strike will happen in January, 100% for sure. They might still be voting on the German ones. But in the UK, you've got strikes going on all week. Nurses, ambulance services, rail workers, postal workers, airport workers, border force agents, highway workers, civil servants. But they got government workers going on strike. I didn't even know government workers could go on strike. They have firefighters, charity workers, and meteorologists all going on strike this week. So Christmas should be fun, right? Everybody getting their packages in the UK this year. That should be fun. We'll see how this plays out. It sounds like a hell of drama. Maybe this is kind of a regular thing or maybe just routine, but that sounds like a lot of strikes, especially the week of Christmas. Doesn't sound good. Doesn't sound like a good situation. But hell, what do I know? And again, going back to the EU, or sticking with the EU, I wanted to talk about their coal consumption. Right, their coal consumption is going up right now, and the EU, a lot of the European countries, they're like really adamant about lowering greenhouse gas emissions, green energy, clean energy, but they're back to burning coal because the supply chain crunch for oil and natural gas because of the war. They're burning coal while claiming they can cut emissions by 55% by 2030. Does this really make sense? Because the global coal use went up 1.2% so far in 2022. All right, that's like 8 billion tons, surpassing the 2013 record. And we know the coal plants went back online in the UK and in Germany. And if global coal consumption is up 1.2%, I'm just trying to do the math here. I'm trying to think about it, right? I'm really trying to think about this. How do we cut emissions by 55% by 2030, which is what Europe claims to be able to do? How do we do that if in 2022, that means we have like 8 years to cut emissions by 55%? That doesn't make any sense. It doesn't to me. So anyways, those were the things that I felt noteworthy. Always keeping our eyes on what the central banks are talking about. Always keeping our eyes out for potentialities when it comes to the Fed and our interest rates. What do you guys think about the PCE? I think the PCE index is supposed to come in at 0.2% lower. Core inflation, I think is supposed to come in like at 5.4%, something like that. Again, just pay attention to the expectations. If the number is better than expectations, or I should say, if the inflation number comes in lower, comes in cooler, that will be potentially bullish for the markets on Friday and going into 2023. But if this PCE index on Friday comes in real hot, and we don't know that it will. Remember, Canada's inflation numbers this week, different type of number, but it was their CPI, came in a little bit lighter, right? Maybe that's an indication. But if that does happen, if the inflation comes in real hot, that's going to be probably extremely bearish, unless the market's already priced that in, and that's always a possibility. But let me know what you guys think in the comments section down below. What are you watching that I missed here on this channel? Always enjoy hearing back from you guys. And follow me on Instagram at Millennial Trades. And as always, until next time, I'll see you on the next video.